Good evening. This is Tim Barnby, the No Nonsense Trader, and I wanted to recap our trade for this week. We didn't have a lot of trading this week. We had three gaps in the beginning of the week, and all three of those gaps did close, believe it or not. They all closed on the second two trades, which was a Euro Yen and a GBP JPY. They both closed on Wednesday. So if anybody hung on to those like I did, congratulations. The last trade, this was the only one that got picked up this week, was a short order on the Swiss. And yesterday morning I called about 9 o'clock our time, 9 o'clock in the morning, um, right around in here. I called to sell the chef at 1.1431, stop loss of 1.1479, and a take profit at 1.1324. Fortunately, a few hours later, I was able to cover half of this, making it a free trade. So, we sold here, placed a stop loss here, and when price moved down to 1380, down in this range, we closed half. At this point, you cannot lose money on this trade. It's free. If it went all the way up here, if it retraced all the way up here and stopped out, you're out nothing. So that's always good. Now we're free to sit on this and actually make some money. Now I had some questions about how I picked this spot for the price action to turn around. So I'll cover this a little bit. Let me go over here to the daily chart. Let me get rid of this first. Get rid of that. Get rid of the cover half. Okay, go to the daily. Now the first thing I do at the beginning of every week is I pick your reverse levels. And if you look here, you see this red line. Oh, we don't want that red line, do we? Hang on just a minute. Yes, we do. Okay, good. All right. This red line right here. Look, I placed this here before the trade. So, look here. Go all the way back. You see where price is flip-flopping? This becomes support. It breaks. It becomes resistance. Spiky traffic around it. It becomes support again. Price goes way up here, comes down, turns right back around on the railroad tracks, goes up, comes back down again, price comes back down on it again, and it becomes support again. It breaks down through the support and it becomes resistance. Then it breaks again. You can see that price is piled up here. This is a high probability spot for a lot of price action. It also happens to be pretty close to 1450, and the 50 number being a big round number. So, it was a good place to place the trade. Now, let's zoom back here a little bit on the 4-hour. You can see once again, you can see what price action does at this point. Right there is our trade. But you can see even closer what it does. Look at this. Price piles up on this point consistently, and it has for a long time. Now, another reason for picking this trade. I went to the most recent swing and pulled a fib. It's as simple as that. And we go to the 1-hour chart and we can see that our price right here, corresponds with the 50 fib. Well, the chef and the euro both like to retrace to this level before they go down. The powers that control this currency do this. So now we picked it up here, and of course it went down. It's gone all the way down to here, and now it's retracing. But here's what I want you to look at. Now, if you look at the euro and you look at the Swiss, you see this area right here, the 23.6? Here's what I noticed, and I've noticed this for a long time, and you can pull fibs on some historic swings and tell me if I'm wrong. What we do here is this thing will just dance on this 23.6, and this is consistent. Now, what it's doing here, a lot of people are thinking that it's going to turn around at this point, and it is. But it's only going to turn around and retrace to the 38.2. Now, what I expect price to do, once we have a little bit of volume, is to go here to the 38.2, and then I expect it to go back down. And how far do we expect it to go? Well, here is where I planned on taking profit, but I think I'm going to give you a couple of options early in the week here. Look, here is where I expect it to go, right here. So I'm expecting a move down to 111.45, down to this first target on the fibs. So, whoops, no, we don't want to do that. That is what I expect right there. I could be wrong, but we'll see. It's a risk-free trade, so it's worth a shot. This is the only way you ever allow yourself to become successful in this business, is to actually sit through these particular trades and see where you head, where you go. But now take a look. I'm serious now. Look at the euro and look at the Swiss, and tell me if I'm wrong. It sits on the 23.6 and sits on here, and basically what I see here is market movers and market makers basically accumulating shorts here. As soon as the buying pressure comes, they let it move up, and then they buy a little bit, and they just accumulate, and they just accumulate, and they just accumulate. And then when the market opens, they're going to let it go, and it's going to go here, and then they'll start. It's going to go down. The selling is really going to start at this point, and of course that makes sense because of where it's going. Now, if it's headed down where I think it's headed down, the bankers are going to make a fortune when it gets down to this level. Think about all the selling that went on up here, just a little tiny bit at a time, just keeping this thing in chip shop range. Okay. Well, that's about it for today, and I will see you next week with our next recap. Thank you very much. Once again, for those of you who want to get the trade signals as they happen, I only take very high probability setups. As you can see, I'm very close. I'm also a very conservative trader. I'm not going to have a trade for you, 5 or 6 times a day. I place only high quality trades. I make sure that every trade has at least a 2-to-1 risk or reward to risk ratio. And then I give it high probability, and then I give you a money management plan that pretty much guarantees that if you get more than 20% of your trades right, you're going to make money. So give us a try. Come on over to www.mmedge.com and subscribe for a few months and see if you like it. And we will talk to you later. Thank you very much.